Welcome to a new market update, and in this update we're going to cover the fact that Bitcoin has not been continuing upwards. We have been stating some levels that you should be watching. They have been hit and we have seen a correction since, and the actual reason lies in the Fed with Jerome Powell. That's what we're going to discuss today, but before we're going to continue, make sure to subscribe beneath, like this YouTube update, and check out my Twitter and Instagram where you can find daily content on the markets. So when we're looking at the actual markets right now, we've had a beautiful bounce towards 43k and the market started correcting since. Therefore, the correction was actually, immediate impact from the speech that Jerome Powell has given, or the news that came out of the Fed, in which they don't like the high numbers of inflation and they want to start hiking some more and tighten the monetary policy some more to reduce the amount of inflation and to slow down the economy. And as an immediate reaction, the price of Bitcoin started to nosedive while the equity markets are not doing too worse at this point. And because of the tightening of the monetary policy, or the actual impact of that, the dollar has been accelerating again. So a few things you can see in this is the first one is the dollar and the Bitcoin still have a huge correlation, and that's why you see the impact going like this. If the dollar goes up, other currencies, including Bitcoin, do not go well, but also equities will not go well, as institutions will have more dollars in their portfolio as a risk-free asset through which they can get or generate yield. Now, what Jerome Powell has been saying too is that the inflation is quite high, and due to the inflation, he has to hike even more or tighten the monetary policy. However, the fact that the inflation is so high is because of the insane amount of printing they have done themselves. So now the people are feeling the pain of something that they have been doing in the past 20 years, which is printing an infinite amount of money. And through that, the purchasing power of all the people is getting reduced to a level that people literally do not even have the money to go out for dinner at a restaurant, and just have to see if they can survive the month. And that's just the middle class people in the Netherlands. I think that most of the people from my age that just have a regular job can't even buy a house, can't even rent a house for themselves. They have to live with other ones. Right now the energy costs are going through the roof. So standard life stuff like going out for dinner isn't really appropriate, or it isn't really the standard anymore. It's getting exclusive. So the Powell gave this information. The impact has been seen immediately in the markets as Bitcoin rejected from 43k. The dollar has been going up too. And now the question is, what is going to happen next? Well, obviously, if they are going to hike even more, the dollar continues. We have discussed this yesterday too. The impact of the on the markets or the crypto markets will be heavy. So then the Bitcoin will start correcting even more, and that's why you have to look at those levels, but also at the macroeconomics. Overall, I think it's a short-term panic reaction, which means that it generates some very nice buy the dip opportunities if you are interested into the markets at this point. We've also been covering take profit levels on Bitcoin yesterday, and right now in the chart we'll be looking at what's most likely going to happen next in a few scenarios. So the price action of Bitcoin has been following the scenario that we were making, right? So I'll just put it on a lower time frame, which is the 2 hour, in which we constructed two levels to take into account. Those two levels are the ones that we have been painting here, and we probably are going to get a rejection from there. So what did happen? We have got these highs, and we've got a beautiful rush towards 42.1. Immediate rejection, in which the correction takes out the lows here to get liquidity to go back upwards again. The run upwards did take place, and we got all the way towards 43.1, through which we took out this recent high, and we got towards the resistance zone that we have here. So let's get towards a different chart in which I can explain it a little bit better, in which if you go to the 1 hour, you can see that we've got this breaker here. So we reject in that area, definitely not hitting it yet, but we got close. We also started to make a new high. And then the moment it starts to drop beneath the recent high, or actually beneath this one, the cascade starts to take place. So you can start seeing the liquidity that has been taken from these lows as we start dropping down. So all the stops that are beneath those levels only accelerate the downwards drop, and that downwards drop starts by breaking beneath this previous high at 42.2, which was influenced or pushed by the news that came out of the Fed yesterday evening. Because we started to nosedive this heavy, we take out all those lows here, right? Which we have been doing, and then you can get a overshoot here as we have been seeing. If we really want to mark a few important levels, I think that the entire region that we have around 39.3 is something that we should be taking into account. Didn't really get there overall yet, but that is one that we should be taking into account. Now, what is next? First of all, let's look at the DXY. This one, I generally stated that it was most likely going to turn around and have a bearish divergence that plays out too here. We got a beautiful bounce back up in the sense that we got close towards this long, where front ran, broke back above this previous support. So I said in the update yesterday that if we want to have some momentum on the DXY, it has to break 100.2, and then second it has to break the level at 100.6, which ultimately has happened, and in that case you want to see it continue hold above 100.6. So I think that we're going to consolidate a little bit here, and the question is, how strong is this trend going to continue? Are we just sweeping the high, confirming the bearish divergence, and swap or reverse after that, which can be done through the ECB with coming out of news, or can be done with some other fundamental macroeconomic stuff? If that is going to take place, Bitcoin is fine, and then we're going to continue moving. And then when we're looking at Bitcoin and what we can expect next, the question remains the same. So we had a beautiful bounce from this level at 38k. That level still has to hold. If 38k is lost, that is going to be the painful scenario, and then I'm assuming we are going to retest this level here. So then I'll be out of the markets, and then I'm looking at lower levels for long entries again. When we're looking at the lower time frame, we have just concluded that we have been sweeping these lows. So we have been sweeping those lows, and we've got a crucial level that the market has to break through if there is something that it wants. So we have been sweeping these lows, and we've got a clear range resistance at 40.7. So I think that if the Bitcoin price action bounces back above 40.7 and flips this level that used to be resistance, I think that the chances are eager that we're going to retest 42.2 again and have some more momentum, so this play can be made. If we can't break above 40.7, then this entire block that I just discussed at 39.3 is literally the last hurdle that we could be finding our support. So 39.3 has to hold there, and if that is possible, we clearly still have to break 40.7, but at least are open for continuation. So all in all, it's not the best. The chart is not looking great. Definitely tons of liquidity on the downside still to take at this point. However, the sentiment is overall quite bearish too, and in that case I'm assuming that if we break 40.7 in the coming days or in the coming week, I think we can start accelerating quite fast, but ultimately when we have been ranging this range for like 4 months already, the next big move is going to be heavy, and I think that if you look at the fundamental aspects, the odds of going upwards after such a period of sideways consolidation are increasing day by day. That's the update today. Make sure to subscribe beneath, and also don't do stupid shit. Enjoy your life. I'll be back tomorrow with another update on on-chain analysis, and maybe I'm even back on Sunday with an update too. Make sure to subscribe, like this YouTube video, and check me out on Twitter and Instagram, and I'll see you again really soon.